Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Michael McAdoo, partner and director of global trade and investment at Boston Consulting Group, Rebecca Liao, co-founder and CEO of Saga, and Brian Janovitz, partner at DLA Piper. We're here to discuss the role of cross-border joint ventures in a dynamic geopolitical environment. It is great to have all of you with us. Welcome to Trade Talks. Michael, let's kick it off with you as we think about it in the context of the current landscape. It seems to be that tariffs are the key variable out there.
Well, sure. Tariffs are certainly getting a lot of the headlines today, but there's always tariffs and then the fundamental economics that are underneath them. One of the things I would say is the environment right now is very differentiated. We've gone from a system where the US essentially had a set of trade rules for WTO members with which it didn't have free trade agreements, and another set of rules for those with which it did, such as Canada and Mexico, to one now where dozens of different countries have different tariff regimes, often complemented by different other non-tariff measures related to trade with those countries. So the key word is difficult to navigate, and that's what companies are doing.
Yeah. And Rebecca, when we think about tariffs through the context of thinking about the supply chain, the digital supply chain, it is certainly making an impact there as well.
Absolutely. I think that a lot of people, when they look at the tariff situation, are looking particularly at semiconductors and other key components for hardware that are important for critical technologies like artificial intelligence and now crypto as well. And the difficult thing about this particular tariff regime is that it is not comprehensive, despite the fact that we talk about it a great deal. There are so many other agencies and provisions that oversee the digital supply chain, and those are not talked about quite as much. And often the issues are completely convoluted with one another. And so when it comes to companies deciding on strategy going forward for Q4 and the remainder of 2026, it is incredibly difficult to navigate. I think the Trump administration is trying to reconcile all of these different areas, but it's much more complex than a bumper sticker.
Yeah. And Brian, when you think about it too, it's going to impact the trade landscape as well. This is what it all trickles down to when you think about it, even in the near term as well as the longer term.
Yeah, that's exactly right. And as Michael alluded to, we've had a trading system in this country, in the world for the last 30 years that is really driven towards eliminating non-tariff barriers, lowering tariffs, and treating everybody roughly equally. And not overnight, but in a very short period, we have seen significant changes to tariff policy and to broader trade policy, and companies are having to adapt to that. There is an increasing complexity to the proliferation of rules, and there are also, in this environment, going to be some opportunities. But it is no question difficult for companies to figure out exactly how to navigate. I think there was some sentiment early on that, once we got to Liberation Day on April 2nd, or once we got to whatever the next announced date was, that, well, then at least we would have certainty. And I think companies are starting to realize that certainty is probably not coming for this area. There are going to be continued disruptions and changes here, and companies are going to have to make decisions amid uncertainty. The other hope, I think, for some time from some was that we would eventually kind of go back to the way things were. And I think it's pretty clear at this point that we won't go back to the way things were. It's not exactly clear what will come in its place, but we are in new territory here, and companies will have to kind of operate in this environment.
Yeah. And Michael, the challenge that escalates this as well is that the sector impacts are uneven, right? And that's what I'm hearing from the three of you. So how would you think about it with cross-border joint ventures as a strategic response to navigate these challenges as it relates to tariffs across multiple sectors, and then what it looks like longer term with trade and our partners?
Yeah, I mean, all of this comes down fundamentally to where does a company source, where does a company transform, and where does it sell its product or service, right? So kind of the classic three steps in a global value chain. And so what's happening now is one market, the United States market, now has a completely unique trade regime with essentially every country in the world with varying different levels of tariffs and non-tariff barriers, as Rebecca was alluding to. And so now you need to think about that value chain. And if you're sitting outside the US, you'll think about where else can I sell that might have fewer restrictions on my product getting there. If you're trying to serve the US market, you'll be thinking about from where can I serve it outside, or where can I serve it from inside the US to make sure that I can minimize those tariff costs, which, depending on the margin structure of the industry, can be very significant. I mean, a lot of these industrial sectors that have been hit by tariffs typically have very, very low margins, perhaps in the high single digits or low double digits. A 25% tariff can literally eat up all of the profit of that company. If I'm in the luxury goods space and a $2,000 handbag might cost $200 as it enters the border, it's a lot easier to absorb a 25 or 50% tariff. So the reaction really depends on where you source, where you transform, and where you sell, and then the margin structure of your industry.
Yeah. And Rebecca, I think it's interesting that you're bringing in stablecoins to the conversation because it could be a critical tool for international commerce and a strategic force for U.S. financial dominance because part of commerce and trade is the currency that goes behind facilitating it.
Absolutely. The stablecoin conversation is an interesting one. And frankly, the entire administration's stance on crypto comes at a very interesting time when it is looking to really put America first in all things international. And the reason I say that is crypto and stablecoins, especially with regards to international trade, has often been thought of as a tariff busting or a sanctions busting tool because it's automated settlement. It goes through decentralized sources. And yes, you can trace on a distributed ledger where the transactions originate from and where they're going. But at the same time, it's getting increasingly hard to track those transactions. And so the proliferation of this kind of technology and the strengthening of a decentralized ledger happening at the same time as the US is instituting international trade regimes that really require a lot more tracking. It's just a very interesting tension there. But with respect to how stablecoins have been sold to Congress, to administrative agencies by this administration, it has really been sold, as you said, a way in which the U.S. can really cement its dominance in international financial markets. There is something to that in the sense that stablecoin adoption, particularly when other countries are trying to do it as well, is incredibly important to get out first. But at the same time, stablecoin is backed one for one by the US dollar or any other sort of fiat currency. And so at the end of the day, you need your fiat currency to be strong. The stablecoin is only as strong as that underlying currency. And so for the administration, this is a great tech initiative, but it does not belie the fundamentals.
Yeah. Well, and Brian, part of that too is just understanding how the operating framework is going to work. Digital asset legislation is in the process of doing so, but we're also thinking about other key areas of framework as well that increases compliance burdens. You're navigating fragmented regimes. Policy is always changing. It just seems like there's persistent change, and that's the only thing that you can bank on.
Well, I think you're right in that you can bank on change. But I would like to say there's a difference between not having a crystal ball or perfectly predict the future and knowing nothing. And it was not the case that we don't know nothing, that we know nothing, right? There are things that we know, and business leaders at the time can make informed decisions based on what we know and what is more likely, a sort of probabilistic forward-looking analysis to try to make decisions. Part of it too is building some level of flexibility into your future operations, so that you aren't, only optimized for one outcome. Because of this level of uncertainty, it may be that you need some level of duplication of operations, duplication of suppliers, or at least not a single source supplier, things like this. Oftentimes things that come with more near-term costs. But you could think of it as an insurance policy that buys down some of the geopolitical risk in the medium term, as well as other things that could potentially interrupt a supply chain.
And Michael, what do you see companies doing in terms of resilience and their outlook operating in a fragmented trade order? What are some of the policies, procedures, plans that they're putting into place?
Let me pick up on something Brian just said. So in this uncertainty, we do know things. We do have examples of how things have gone in the past. So that idea of scenario thinking is very, very important, right? I mean, you have certain of these situations, for example, countries like Brazil and India and South Africa, where there's a high overhang of political issues on the trade policy. Well, if those get resolved, where does that 50% tariff today land after that is potentially resolved? So what the best companies are doing are setting up tariff command centers. And they really range. I would say that none of our clients is doing nothing. Everyone's doing something. And you might have a client that says, a company says, oh, we're all over this. We've got a Zoom call every Tuesday morning at 10 Eastern, and everybody dials in from around the world, and we discuss it, and then we go back to our regular jobs. Another bookend is a company that's actually set up a physical location, often at headquarters, where the team isn't just designated, it's actually dedicated, and it goes to that room every day and it docks in, and you've got everybody from public affairs, legal, operations, supply chain, sourcing, trade compliance, all looking at the different sources of vulnerability, working on these scenarios. And how can you divide your actions into something called a no regret move, that I do it now and it helps me in any scenario, and then a series of contingent moves as different scenarios materialize. How does the company actually get ready to minimize its impact and optimize its advantage?
Yeah. And Rebecca, looking at that through the digital asset or emerging technology lens, it's also a matter of national security as well. So building in cyber security and that framework around these plans that are emerging within a fragmented environment, I think that's key as well.
It is key. But once again, the difficult thing with these tariffs is not just the uncertainty that both Brian and Michael have been talking about, and the fact that it takes a long time to build that resilience and that flexibility into your supply chain, well beyond any reporting expectations that you might have for the market. It's also the fact that this tariff regime is in tension with a lot of other goals in this administration, which are also good goals, one of which is national security. And with respect to the digital supply chain and the supply chain for any critical goods, completely understand that the administration wants to move some of that supply chain away from countries that may be less friendly to the US. At the same time, what that means is it angers countries that are critical to the US for other components of the economy. Let's take artificial intelligence, for instance. So it has been the wide consensus within DC that we need to work with our allies in order to have effective AI policy to combat, namely China. And so we need our allies in the EU, for instance. We need our allies in friendly countries like Canada and Mexico. And we need to be able to dominate and control that AI conversation as much as possible. At the same time, we are pursuing rather aggressive tariff policies against these countries. And so the mood for these countries to negotiate with the US and really collaborate with us on something as critical as AI lessens as a result of these tariff discussions. And so I think that national security in general is a very good goal for a country to have. But when it comes to a sort of, all of national security policy stance, I think that the administration has some work to do, frankly, in terms of reconciling its different moves when it comes to the digital space and when it comes to the space for tariffs and physical supply chains.
And that's a great point that you make, because we view information sharing in very different ways when it comes to the US and the EU. And that has been a roadblock for a number of decades in terms of, data transfers and how we share that type of information. And we still don't have, in the US anyway, a framework in place to, be able to have those conversations with the EU, because they do have established frameworks. So I think that's a great point that you brought up about how we approach information sharing. Brian, how do you view it in terms of trade moving forward with APAC?
Yeah, well, this is, in some ways a very typical issue that you would find in trade, which is you agree on kind of broad strategic alignment, but you have different systems or different political demands or different priorities in the way that it gets implemented. And you have to kind of figure out how these two systems should talk to each other. Obviously, on something like data sharing, there's been a fair amount of disagreement for years now. I think the question to watch for is, how much do these partners prioritize aligning for strategic reasons? You mentioned in your question a minute ago, how does national security fit into all of this? As we move into a system where there is, rather than kind of everybody trading under the same rules, and instead more groupings, kind of overlapping groupings of trade partners, one of the most likely areas on which those groupings will be based is alignment on national security concerns. So to the extent, and I think this is a question that has yet to be answered, but as we see the Trump administration and US trading partners prioritize that strategic alignment on national security concerns, that may provide the sort of push that's needed to overcome some of the technical issues that need to be worked out in order to actually have some systems that speak to each other and can coexist.
Yeah. So Michael, in the last few minutes here, when we think about what this environment could look like over the next 1 year, 3 year, 5 years, what do you think is the most reasonable or outcome that you would expect?
Well, I think it comes back to the comments that Rebecca was making about how trade partners are reacting as countries. And Brian bringing in the security point, these have often been interlinked. And I think you have a situation now where any country, including some very long-time U.S. trade allies like the European Union or Canada or Mexico, thinking of how else they can diversify trade and not be dependent on a country that has just imposed sweeping tariffs on them, unprecedented and not according to any of their pre-existing trade arrangements. So you could see a grouping of countries that are a little bit more rules-based and oriented. So think about the European Union and some of the countries of the Trans-Pacific Partnership, which includes Japan, Australia, New Zealand, Malaysia, and several other countries in the Pacific Rim area, including Mexico and including Peru and Chile. You could see maybe China emerging as a bloc, engaging more with the global South and the BRICS nations. And you could see the US, of course, with its unique trade policy, seeking to change trade dynamics with almost every country in the world. So there's an example of how you could see this drift into kind of different trade groupings. I won't call them blocks, but I might call them poles of trade.
And Rebecca, I'll same with you as well when you think about your term and longer term outlook.
So I think Michael just gave a fantastic overarching answer. I'm going to focus a little bit on the technology side of things. I think we're seeing this a little bit outside of the technology sector as well. But I think what tech companies, especially here in Silicon Valley, have realized for a long time is that they hold a great deal of power, oftentimes on par, if not greater than that of sovereign nations. And the more that these companies develop their own strategic goals and pursue them with respect to critical things like artificial intelligence or like crypto, governments are actually responding to their moves as opposed to the other way around. And so over the course of the next 1 year, 3 years, 5 years, I think we're going to continue to see that sort of tail wagging the dog phenomenon, which is that there is going to be a balkanization of the digital landscape based on which companies do well and which ones are ultimately able to impose their strategic objectives and their view of what these technologies should be on the market. And the countries are really just reacting in terms of their technology policy. That has bearing, obviously, on our digital landscape, but it also has bearing ultimately on how these tariffs work, especially, once again, if they touch goods that have to do with the hardware that powers a lot of these technologies. And so that further balkanization is what we wanted to avoid as the original vision of the internet. But I do think that it's going to come back full circle, and that's the future that we have to look forward to.
And Brian, we'll wrap it up with you and your outlook.
Yeah, I think there, again, are challenges in this environment, but there are also opportunities, including, we've talked so much about the uncertainty, opportunities to shape the policy that is being made. There is so much policy being made with all of these developments. One of the things we talk with clients a lot about is it's probably not going to be super effective to go in and try to talk the government out of everything it's trying to do. But there's a lot of room to understand what various governments are trying to do and to help them craft policy, implementable policy that drives at their objectives, but does it in a way that either minimizes the harm to a company or allows that company to pursue new opportunities for growth. So I think there are real opportunities to play a part in the policy development process here as all this change takes place, and that can lead as well to business and market opportunities.
Yeah, interesting perspective. Appreciate all of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.